What's up, everybody? This is Sunko, the Korean bro, and today is 2023, March 20th, right? Okay, let's see, right? Uh-huh. Why UiPath, Uber, and Oracle are no-brainer buys right now? Why these bank stocks are moving in opposite directions? One resilient stock to help bolster your portfolio through any market. Hmm. Microsoft could become the world's first $5 trillion company by 2030. Two no-brainer stocks to buy right now for less than $20. Huh. I'm gonna just go through some stock articles and then I'm going to read through it, and then at the end I'll be talking about some of it in depth. Okay. Hmm. Mm, okay. Let's see first. One resilient stock to help bolster your portfolio through any market. Costco's unique membership model drives volume in any economic environment. Sales growth is slowing, but it may be back to slow and steady. Management has many opportunities to generate high revenue. Last time the stock market posted an annual value drop 2 years in a row was in 2002, when it fell for the third consecutive year. Back to back annual losses have happened only three other times since the Great Depression in 1929, making them a real rarity. Are we on track for that to happen again? The S&P 500 lost most of its year-to-date gains last weekend, but it's already climbing back up, 3% yield to date as of this writing. Many individual stocks that were soaring this year have retained most of their gains. Investors are still tentatively confident. The market experiences upheaval from time to time and ups and downs every day, making it crucial for investors to have some stocks in their portfolios that provide resilience and security in any market. Costco Wholesale is a great example. Two no-brainer stocks to buy now for less than $20. Officers using artificial intelligence to change how banks process loan applications, an enormous opportunity. Uh, Sentinel One is a top cybersecurity provider that doubled its revenue last year. Okay. Offshot. Offshot has the potential to deliver multi-bagger returns over the next decade. Its artificial intelligence-based lending platform is completely revolutionizing how banks process and approve credit applications. The benefits Offshot's platform offers a more accurate risk assessment, higher approval rates, and lower interest rates for borrowers. This adds up to better terms for consumers and higher returns for lenders. But it shouldn't be surprising that a company operating in the world of loans and credit is going to suffer lower revenue performance in a weakened economic environment. Officer reported a 52% drop in revenue in the last quarter, driven by lower loan originations from lending partners. The stock has fallen 85% over the last year, but that makes it ripe for a big rebound. Upstart's business was booming just over a year ago when the economy was recovering from the pandemic. It will return to growth when the outlook for the economy is healthier in the near term. So the most important question is whether it can survive a downturn. While the company ended 2022 with a net debt position of $553 million, Oxford has a record of turning a profit while investing in its platform capabilities. Management is taking actions to lower costs to return to profitability, including reducing staff and cutting back on marketing to get margins up. It's also encouraging. It's also encouraging that Opera is still seeing demand for its platform without having to lower prices for its services. For example, the company reported a 14% decline in lending volume last year, but the platform's contribution profit increased by 13% year over year, reflecting solid pricing power. Offshore's long-term market opportunity in capturing more loan originations is estimated at $5 trillion. So it can grow for a long time. If you don't have much to invest but want a stock with attractive upside without risking a lot of money, Offshore will make a great choice. Buying one share at the current quote of about $16 could turn into a three-figure sum in the next bull market. And we got Sentinel One. Perhaps an even better bet right now is the top cybersecurity provider spending on mission critical security software is a must for businesses even when the economy isn't performing well. This is why Sentinel One continues to report robust growth. While the stock's recent fall could be a once in a decade buying opportunity, Sentinel-1 is using AI to detect and respond to threats in real time. While there are several cybersecurity providers competing in this burgeoning market, Sentinel-1 claims its Singularity Axial platform offers the fastest response time of any alternative. But what matters most is the company's superior growth relative to competitors. Mm. CrowdStrike is one of the top leaders in cybersecurity, but its 54% revenue growth last year is far off the pace of saying 106%. One factor that has contributed to sell-off in Sentinel-1 stocks over last year is lack of profitability. While Sentinel-1's operating profit margin has been negative, it was able to cut its adjusted operating losses nearly in half last year. Plus, the company is winning a majority of deals against competitors while retaining stable selling prices, which is a good indicator that margins will continue to improve and provide a catalyst for a higher stock price. Next, Microsoft could become the world's first $5 trillion company by 2030. The world's second largest company behind Apple, with a valuation of $2.1 trillion, it has sustained substantial growth opportunity ahead in areas like cloud computing, especially artificial intelligence. Based on its historical revenue growth, its future potential, and its current price sales ratio, Microsoft could become the first $5 trillion company. Targets industry with high growth potential. If Microsoft relies solely on some of its flagship product like the Windows operating system and the Office 365 document suite, it will probably be struggling to generate growth right now. Those platforms are used by millions of people worldwide, so new customers acquisition doesn't always move the needle. Apple faces a similar challenge. Its iPhone smartphone is responsible for most of its revenue, but it inches closer to market saturations each year, mostly relies on upgrade cycle. Microsoft has instead chosen to aggressively expand beyond its core areas of expertise. It has built its own hardware businesses, including its Surface line of notebook computers, tablets, and its Xbox gaming console. Plus, its Azure Cloud Services platform ranks in the top two globally, providing hundreds of solutions to business customers embarking on digital transformations. Azure is regularly the fastest growing piece of Microsoft's entire business, and by 2030, it will be operating in a market that could be worth $1.5 trillion per year, according to an estimate by Grandview Research. Then there's Bing, the company search engine that has failed to dent rival Alphabet's Google search in any meaningful capacity, but that could soon change thanks to Microsoft's multi-billion-dollar investment in OpenAI. The developer of the revolutionary ChatGPT chatbot powered by artificial intelligence. It has the ability to offer detailed, tailored response to difficult questions, to give users the information they need faster than the traditional internet search model. Plus, Microsoft has integrated OpenAI into its Azure platform, giving customers giving customers access to game-changing AI tools with the power to transform their business. Are still ahead. According to a forecast by Ardent Investment Management, which is led by famous tech investor Kathy Wood, generative AI software like ChatGPT could attract $14 trillion in revenue by the end of this decade. Bing is one area where Microsoft will benefit, and the platform has already seen significant uptake. The Bing mobile app attracted as many downloads in a few weeks after the ChatGPT integration as it did in the fall of 2022. Microsoft estimated the global digital advertising market is worth $500 billion, with 40% of that amount, or $200 billion, coming from search. Right now, the Bing search engine has a global market share of just 3%, but ChatGPT might be the catalyst. It needs to finally eat into Google's domain 3% share. So here's how Microsoft could reach $5 trillion valuation. From a valuation perspective, I'm going to focus on Microsoft price sales ratio because it has held a consistent range between 8 and 12 for the past 3 years. Despite the pandemic and the tech market crash, it's measured by taking the company's annual revenue of $198.3 billion in fiscal 2022 and dividing it by its market capitalization of $2.1 trillion. Okay, the company has grown its annual revenue at a compound annual rate of 11.3% over the past 7 years. If that growth rate remains consistent for the next 7 years, Microsoft revenue would top $420 billion in fiscal 2030. Blah blah blah. It keeps on talking about why you have to buy Microsoft and its potential. There are a lot of rooms to grow. Hmm, that's what it's saying. What else do we have? Alphabet and Amazon and Vertex Pharmaceuticals. Let's talk about Alphabet, okay? Okay, Google Search, Google Cloud, YouTube TV, Android, Chromebook, Pixel. Those are some of the top reasons to buy Alphabet that immediately comes to mind. These and other products and services generated whooping $282.32 billion in sales, nearly $60 billion in profits last year. Keep in mind that those results came during a period when the advertising market was weak because of worries about the economy. Once the outlook improves, which it will sooner or later, Alphabet will almost certainly deliver even more impressive numbers. And there are three key growth drivers to especially watch. Google Cloud already brings in a nice chunk of revenue for Alphabet, more than $7.3 billion in 2022. However, it's not profitable yet as more companies move their apps and data to the cloud. I expect Google Cloud will become an even bigger winner when it achieves profitability. Alphabet's bottom line will shift into a higher gear. Artificial intelligence should also provide a massive tailwind for Alphabet in the coming years. Sure, OpenAI's ChatGPT and GPT-4 have been impressive, but Alphabet has its own AI product on the way. More importantly, the company has the expertise, financial resources, and access to data for training AI systems that few can match. Finally, there's Alphabet leadership in quantum computing. This is an area that I consider the most overlooked reason to buy Alphabet stock. Global consulting firm McKinsey and Company predicts that quantum computing could be a $700 billion market in the future. I fully expect Alphabet to be one of the top players. Shopify, we got Shopify. Market Libre. Let's talk about Market Libre. Okay, Argentina-based Market Libre is a commerce and fintech company that has followed the Amazon playbook to great effect in Latin America. Specifically, Market Libre played the part of pioneer when it launched the region's first online marketplace in 1999. The company has also reinforced its leadership with adjacent solutions like fulfillment services, ad tech tools, both of which make the marketplace more compelling for merchants. The commerce business continued to grow at a steady pace last year, despite the challenging economic environment. Gross merchandise volume increased 21% to $34.4 billion. Meanwhile, Mercado Libre has also built a complementary fintech business that provides payment processing, digital wallet services through its Mercado Pago subsidiary, as well as merchant loans, consumer loans, and credit cards through its Mercado Libre subsidiary. The fintech business is flourishing. Mercado's pages payment volume increased 60% last year, while Credito's credit portfolio increased 71%. Putting the pieces together, Mercado Libre delivered a strong financial performance in 2022. Total revenue increased 49% to $10.5 billion, and GAAP net income increased fivefold to $9.53 billion per diluted share. The company also saw its commerce and fintech take rates improve as merchants and consumers adopted more services. Investors have good reason to believe that momentum will continue. Mercado Libre runs the largest online commerce and payment ecosystems in Latin America, which itself ranked as second fastest growing e-commerce market worldwide last year, implying equally strong growth in digital payments. But Latin America also has one of the fastest growing internet penetration rates in the world, paving the way for continued adoption of online shopping and digital payments. Mercado Libre is perfectly positioned to benefit from that trend. Currently, shares trade at 5.8 times sales, a discount compared to the 5-year average of 12.5 times sales. That's why this high growth stock is a buy ahead of the next bull market. Okay, enough for me. Hmm. Okay, tonight I'm going to talk about. Hmm, Traders Zora. Let's talk about Trade Desk. Trade Desk. Okay. What do we have? What do we have? Okay. Rocking the boat in online advertising, Trade Desk. Digital marketing expert. The Trade Desk is like a digital DJ spinning ads and getting the party started for companies across various channels and devices. The company uses a deep and rich data store to mix and match the right audiences for the right ad buyers. While it's a real time uh, bidding tool to make sure the marketing bits keep flowing. Ensure the Trade Desk is the ultimate booster for the online advertising industry. Is the ultimate booster for the online advertising industry. And the party keeps going even in a gloomy market. Actually, I would argue that clients need this company services more than ever when the ad budget belts are tight. Anything that helps them deliver better sales boosting results per ad dollar is worth its weight in gold at times like these. You can see this quality in the Trade Desk financial reports. Quarter 4 2022 revenue reached a record $491 million, a year over year increase of 24%. Even more impressively, the company's revenue for 2022 as a whole grew 32% year over year to $1.578 billion. Remember, that's amid an economy wide inflation crunch and an even deeper downturn in the online advertising sector. It seems as if the trade desk is not just keeping up with the trends, but often setting them. No wonder it's the popular kidding class, with advertisers flocking to it for their innovative and privacy conscious approach to targeted advertising. The trade desk ability to not only survive but thrive during a perfect storm of down market is a testament to its money making strength and resilience. While the stock may not be a bargain bin find, the company's worth its premium price for investors who want a tech stock with the ability to come out victorious after harsh economic challenges. The trade desk is definitely worth serious consideration. Oh, MongoDB. Look what I found here. I'm using MongoDB right now. Okay, let's see. The picture might not seem as bright for MongoDB at the first glance. Shares of the database platform company have risen a little year to debut, but remain down more than 50%. Okay. Revenue guidance for fiscal year 2024 was lower than Wall Street expected. The company is also slowing hiring to grow because of overall market headwinds, but don't think of MongoDB's business flame. The trade desk is the middle of the road pick among this group based on stock performance. Shares of the advertising platform provider have jumped close to 25% so far this year. Better than MongoDB, but lagging behind market delivery. However, the trade desk certainly is a middle of the road compared to other ad tech companies. For example, advertising agency then to estimate that total global advertising spend increased by 8% in 2022. The trade desk CEO Jeff Grant stated in the latest quarterly update that spending on his company's platform soared by more than three times that rate. The shift to digital advertising and a tremendous increase in ad-supported connected TV, the company's online platform, is ideal for advertisers and the ad agencies seeking to take advantage of these trends. The trade desk is an unstoppable stock now, but should be even more successful when the new markets begin. Let's look at a video clip about the trade desk. Okay. Oh, it's actually really fun. They're talking about why you have to buy Trade Desk and what this company do and like their financial status uh, and like its potential in terms of digital advertising. digital advertising market is expected to grow even at like $1 trillion. So Trade Desk can do a lot of things in that perspective. Anyway, all right, this is it for today. I think I'm gonna have to put an end to it at this point because I'm getting a bit tired. I'll see you tomorrow or the day after tomorrow. Okay, bye bye. Have a good night.